Mohit Gang will be joining us on the show this morning to help us understand what to really expect from the market and the market mood that we are seeing. Mohit, if you can hear me, good morning, and thank you so much for your time this morning. I want to first up understand Infosys, massive set of numbers announced, but then markets were closed yesterday. But we are seeing that sort of play out on the indices this morning. Infosys stock is up about 4% or so now. Wow, in fact, it was in the region of about 3.9. Now the Infosys stock is up about 4%, and this comes after revenue of 45,479 crore rupees was announced, and even the net profit, while relatively lower at about 2.2%, did indicate that Infosys is holding on to its operating margins of about 20% or so, and has given a growth guidance of 3 to 3.5%. Overall, does your view on the IT space now partly change with the traction we've seen? First, with AI revenue coming in for TCS at about $1.8 billion and an overall growth of about almost, one could say, about 9% year on year for Infosys.
Hi, Kartik. Morning. Look, I think on the IT space, honestly, since the time you've seen rate reductions happening in US,
Yeah.
the cycle has kind of turned favorable. If you recall our last discussion, maybe perhaps last to last discussion, I maintained that this quarter we will have to see how the earnings come out, and perhaps then it can just be the time to take a dip on the IT side. However, there is no clear trend as of now which emerges. But having said which, I think the Infosys earnings have kind of taken the mood up, uplifted the mood of the entire sector. My sense is the market is taking cognizance of the growth guidance out here, Kartik. I think 3 to 3.5% guidance is a pretty strong, solid, robust guidance coming out from the bellwether stock of IT index. And I think market just likes that the leadership is again back to the helm and they are taking charge from the front, right? So Infosys has long lost its position as the market leader, and TCS has been a favored stock, but it's coming back to shape now and it's picking up on the growth part as well. Uh, Along with that, I think the AI revenue coming in for TCS, I'm not pretty sure as to how that entire story works out in favor of India or the Indian IT space, because I think globally the market has taken to a new trajectory when it comes to the AI play. I still strongly believe that India continues to be an anti-AI trade as it stands today, which means that as and when the world kind of melts down on the AI froth, India should perhaps see some resilience or see some uptick because of the core IT service enabled systems or the companies which we have domestically. So my sense is yes, it's now time to start taking cognizance of the IT pack per se. I would still though remain a little more bullish on the mid and small IT pack. On the large cap side, it's a stock selectors market, I think so, and one has to be a little cautious. But yes, the cycle is turning in favor.
Right, the cycle definitely seems to be turning in favor. Meanwhile, I also want to talk briefly to you about headcount. And again, we've seen some sort of a divergence, at least in the earnings announcements by first TCS and HCL Tech, and then by Infosys as well. While TCS continues to lay off employees, we've seen junior level employees stack up at HCL Tech, keeping the overall reduction in employees to just three-digit numbers, 260 or something, if I remember correctly. Meanwhile, Infosys in this quarter alone has added about 5,000 odd employees. So overall, we are looking at an outgo of 25 odd thousand employees from TCS, an inflow of 5,000 employees at Infosys, and a decline of just about 250 odd employees at HCL Tech. Overall, what does this tell you about employment in the IT space, and which one of these figures should one really look at to understand what is the trend going to be going forward? Are there going to be more firings or more hirings?
It's a pretty tricky one, Karthik. Honestly, I think no one knows where the die will roll up
Right.
by the end of 2026. But my sense is we still are in that declining phase of employee hiring on the overall IT pack. I think, as I said, India has been late to the AI party. So typically, these all these IT companies which we have in India are now picking up on the AI processes and systems and per se trying to adopt newer avenues. And my sense is we will see the impact on the workforce going forward through the coming year. I'm not pretty sure as to what market makes out of the reading. Look, reducing numbers can mean good, healthy bottom lines at and cost reductions sometimes, but can also show a declining trend of newer contracts, right?
Right.
So you will have to weigh which side it goes. Adding employees for sure shows that yes, there is good business coming in, and the likelihood of strong business momentum continues. So that's a pretty positive trigger on the revenue front, right? So my sense is adding more employees kind of adds to the impetus, and that's why you're seeing Infosys giving us such a good green tick in the morning. On the other side, though, cost reduction could be a favorable thing, and one can also argue that perhaps the company is adopting more AI practices, hence they're reducing costs, reducing the employee strength, and maybe that'll augur well for TCS 1 year or 2 years down the line. But
Right.
as of now, I think market takes that a bit cautiously and in a negative frame.
All right. And then, of course, let's continue with the IT story. We have two other big IT Nifty 50 IT stocks, Wipro and Tech Mahindra, expected to announce their results today. In fact, looking at the momentum, in fact, in the IT stocks right now, Wipro is also up, I think, on the trend that Infosys seems to have potentially kick-started. Wipro stock is also up about 3.3%, and even Tech Mahindra holding strong at about 2.7%. But overall, what are the street expectations on both these? Relatively smaller as compared to TCS and Infosys, but large enough IT stocks?
Look, we don't expect a big surprise from both the players out there. Honestly, I think it should more be in line with the market estimates. And my sense is Wipro has taken a quite a hammering for last year and a half. So perhaps it's time that the stock now shows some kind of resilience. They're all quoting at reasonable multiples, right? So I don't expect any extraordinary surprises. But yes, I think status quo should also be good for the market given the way Infosys is leading the charts.
This other big one, and we're talking about Reliance Industries, and Reliance never surprises to surprise you, and Reliance Industries also expected to announce its results today. There hasn't really been much speculative movement on the Reliance stock. In fact, looking at the Reliance stock right now, it's up just about, a third of a percentage point or so. So any big surprises expected this time around in terms of announcements when it comes to potentially, the separation, the demerger of Jio? Do you think that is something that could potentially be announced as part of today's results announcement?
I think market is sensing that, Kartik. I'm not pretty sure. It's never too easy to call out with the big boy on the street. They can come up with surprises any point in time. However, I think market is expecting something on the front of Reliance Retail or Geo demerger or something of that sort, right? So I'll not be surprised if one of those kind of announcements do come through, and I think that should be a good positive trigger for the stock. Stock is showing some resilience and has shown some decent up move, I would say, in last 1 month odd. But yet, I think market requires some good trigger for the stock to be taken up to the next level. And I think I'm sensing something coming up today evening.
All right, something hopefully would come up, which is going to be of interest to the investors of Reliance Industries. Meanwhile, let's move away from the sectoral focus, Mohit, and spend a minute or two on overall what is the outlook for markets, as we are already beyond pretty much the middle of Jan. Half the month is over, and in this half month alone, we've seen FIIs sell as much as 16,600 crore rupees. This is just the first 15 days of this calendar year. Remember, we had made headlines back in November when we had seen 18,000 crore rupees or so exiting in a month, and this year, just in the first 15 days of Jan, it's about 16,600 crore rupees. Meanwhile, it's not just FII exit, we are also seeing a parallel rally in silver and gold prices. India-EU trade deal expected to close by end of this month, but pretty much no definition to the deadline of the India-US trade deal being announced. And then just about 15 days or so from now is also the Indian Union budget. Overall, a lot of variables playing out perhaps for investors, a lot of data that they are trying to make sense of, and a lot of deals that are expected to be signed. What should one expect as far as the markets overall at a Nifty 50 at a Sensex level go? Do you think they are going to be range bound this entire month?
Look, Karthik, I think first on the trade deal part, the EU pack per se, and if you compare it with US standalone, I don't think so. There is too much of differentiation out there, hardly a big number difference out there. My sense is US would be a 30-35 trillion dollar kind of an economy, and EU pack per se put together would be somewhere in the region of around 25 or trillion, right? So there isn't a big difference. You sign a deal with EU, it's as good or as big as what you sign with US. Having said which, I think sentimentally and in terms of the market mood, I think US continues to be the driver of that mood. And honestly, till such time that India signs or inks something with US, I don't think so. Market is giving us a good reason to go up. Are there reasons enough to go down? Yes, there are reasons and triggers that could be enough for markets to go down. If the result season is even marginally bad or below expectations, I think markets will take a hit. If we are not able to sign a concrete deal with US in this quarter, markets will continue to be range bound and perhaps will show us more red tick. And there is no reason for FIS to come back unless we show that we have a favorable relation going with the big boy on the street, which is US, right? So FIS selling is relentless. Last financial year or last calendar year was a massive FIS sellout, and 15 days, almost 1200 odd crore every trading day of selling is not small for markets to absorb, right? So if markets correct, who will come to support the market is a big question if there are no FIs on the street.
Right.
So that's my worry point. I'm extremely cautious for first quarter till such time that all these things get ironed out. And globally, I think geopolitically, it's an extremely precarious scenario right now. US is on tenterhooks to enter Middle East and flare up the region again. And
Yeah.
if that happens, oil might see a burst up, and that's never good for India, right? So all those things put together, if you see, I think it's time to be a little cautious. It's time to take baby steps in the market and just wait and watch for the entire scenario to pan out. Budget can be a possible trigger. Depends on what kind of animal spirits do government wants to unleash again, whether it'll be public spending or whether it'll be again a consumption driven kind of a boost which government wants to give. But there is very little fiscal latitude with the government this
Right.
time,
Right.
Karthik,
Yeah.
given the way nominal growth of India is, right? So we'll have to wait and watch. But whole in all, I'll remain cautious.
All right. Caution is the word coming in from Mohit Gang. Mohit, thank you so much. As always, pleasure having you here with us on News 9.